It's October 16th, and of course this is the video log that takes 30,000 to 1,000,000. After I show you the account, I'm going to take you through the account tab in your Robinhood account to hopefully explain some of the what everything means, especially with the margin maintenance. I got an email from Robinhood that they're going to be increasing the margin maintenance percentage because of the election, and they expect some greater volatility. So I'm going to go a little bit into detail over the whole entire account tab and break down what everything means for those of you who are confused on some of the terms. But first, let me just quickly run you through the account for those of you who are following the progress of the account. I am sitting at 123,000 here, just up a little bit in the pre-market, and it's going to be a Friday, so I'm actually expecting an up day. We'll see what happens. I think this was a kind of a classic Tuesday reversal type of day, a little bit of a scare, you know, because the stimulus fears, the markets are kind of worried, or at least that's the common perception or the regurgitated reason on the financial media as to why the markets had a fit on Tuesday. And that reason is that stimulus stocks were paused and left for dead for now. And whatever kind of renewed hope there is for newly printed money, then the markets will tend to react accordingly. But regardless, I think they're going to close up on the Friday here. And if they don't, I think we're in trouble next week. But I'm not expecting that scenario. Okay, so quickly through the account. These are all my positions here on the right. This is the symbol, the ticker of the option position. Then there is the strike price, whether it's a put or a call, expiration date, number of contracts, and whether it's a sell or a put. And so then I have, I'm going to quickly scroll, and you can see, you can pause the video player at any moment in order to see the exact information, all information that you might need about these positions. The number on the right just means what the daily changes. Not too much movement in the actual stock positions. These are stock positions now. Up a tiny bit on Apple. I guess SBRA had a decent move. And everything else kind of canceled each other out. Schlumberger up 72. Royal Dutch Shell down 78. Uranium, how did uranium do? Pretty flat. Chemical down a little bit. So anyways, that's the account here. This is just my watch list. And what I'm going to do now is I'll go to the account tab. It's kind of fun to watch the account tab because of these graphs here on the website. This doesn't exist on the phone app, so it's kind of cool to see. You'll see the total market value of my account is almost 127,000, and that's because I've actually borrowed some money, and it's very fitting, so you can see exactly what these terms mean and how they collect interest on this margin. So it says here that 3.09% of my account is under margin right now, or $4,000. You can see it expressed here in the graph. It might be a lot more though, because I have some collateral, and you'll see what that means in a minute. These are kind of the the unrealized gains or losses. So I can sort by equity, and you can see that my first 3 positions are doing okay when it comes to the size, right? If you sort by equity, that means you're sorting by your largest position first. You can see Apple has got a considerably good grasp on the number 1 position in the account, sitting at $42,000 currently. And then it's the emerging market bonds, which are, you know, over a little bit over 12,000, and then realty income at 9, and chemical at 6, and then it kind of drops off a little bit. So that's the account tab here. As you go through the positions, you keep scrolling all the way down, you'll see this little menu here. Alright, and this menu, I'll go through everything that's here so you can understand. So margin used just means how much money I've borrowed, basically how much I've racked up on the credit card. Margin maintenance is the big term, right, that you got the email about. So what this number is here means that you can't drop below this level as your account value, total account value, which means that number that you see on the front page of the website or as soon as you open the app. You can't go below that number. So if my account goes below 54, then I'm going to be issued a margin call. And what that means is they'll give me an opportunity to fix my account situation, meaning either deposit cash or raise cash or sell some positions or whatever in order to meet a certain level of maintenance that Robinhood requires for my account to stay in good health and good standing with their platform, right? So I'll explain further on this, but that's basically what that means. Your account can't go below your margin maintenance level. Options collateral. Luckily, I have some options collateral, so it's not a zero. And what that means is that whenever I sell a contract of an options contract, they take either stock or cash as collateral. So basically, Robinhood locks it into a little box for the duration of the contract. And then once that duration expires, one of two things happens. Either I get my collateral back, or if my contract has executed, then my collateral is gone and I will take whatever's on the other side of that contract trade. Okay, so let's say I have $44,000 of collateral here. If things don't go my way by the expiration date of the contract, I will gonna lose this cash, but I will get in return whatever I've agreed to get, probably some stock. All right. Day trade limit just means, you know, how many, what worth of trades I can execute today, which is 324,000. And over here in the bottom, you'll see that it says day trades, and it has 3 circles and a lock. So if you have under 25,000, you actually you can't really day trade. So you need that $25,000 in order to start day trading on Robinhood, because otherwise you will get marked as a pattern day trader, and there's rules associated with that. You can learn more about that. I don't want to explain it here, mainly because I don't know all the fine details, so you're gonna have to look it up, maybe in another video. Instant deposit is pretty self-explanatory. I can instantly deposit 50,000 in my account and be ready to trade right now. Okay, literally. It'll show up in my account. And then, of course, the actual transaction will take over 2 days. And what it means is that Robinhood is actually taking the risk, right? If the transaction doesn't clear, it shows up more in my account, and then they have to go back and deal with that. But they're allowing me to instantly deposit 50K at any given time. Okay, so total pending deposits. I'm not depositing anything right now. So that's these 2 boxes. Withdrawable cash currently at 0. So it means if I can't use my Robinhood debit card, right? Because I'm actually borrowing money, right? I don't have any cash sitting in the account. I'm using credit. Okay, so which is different than buying power, right? Because I have margin enabled, okay, I have my credit card enabled. This number basically means that I have $25,200 that I can spend still on assets on my credit card. Okay, you can think of margin as Robinhood, you know, your credit card with Robinhood. Okay, or let's say like they're a bank and you're, you know, borrowing money from the bank in order to buy stuff. But I think credit card is a good analogy. So that means, you know, I can buy $25,000 worth of more of stuff, but of course that will increase my margin maintenance, right? So it's kind of risky to go, you know, to spend it all. So outstanding interest means that at the end of the month, so far I have accrued roughly $8 of interest, and I'll be paying those out of my Robinhood account at the end of the month. If I don't have cash, withdrawable cash, which I don't, it will just get added onto my bill, right? It's going to get added onto the margin used. I don't know if you can see here at the very bottom. Yeah, you can. Great. It's just going to get added onto my margin used, $3,920. And another expense is going to get added on is that monthly fee for Robinhood Gold. So it's going to be a total of $13 that's going to be added into my credit card. Under that it says what the yearly interest is of my credit card with Robinhood. I'm just gonna say these terms for now so you get the idea, which is 5% APR, which is not bad for a card, right? And then the unpaid interest, which is the same thing as outstanding interest in this case, which is, I think, a little bit off the screen here. All right, so that's what all these terms mean. Now, there's something interesting that goes on here, which is this margin maintenance number is going to be different based on what kind of equities you buy. So if you're buying Apple, then the margin maintenance requirement is going to be different than, let's say, Energy Fuels, okay, which is a much more expectedly much more volatile company. So you'll see on the phone, I don't have the app where it shows the phone on the screen anymore, but you can't see it on the website. Unfortunately, it doesn't display. But what I'll do is I'll show you on the phone. Hopefully my camera catches it. The margin maintenance and requirement. Alright, I'm going to do this again. It says 50.35. Hopefully it focuses for a minute. See how it says 50.35? Well, I think if I increase the brightness, it's better. Let's see. Maybe not. Oh no, it's worse. That's okay, we'll play around with this. Anyway, 50.35. So the higher number is initial. It's just if you click on the stock and you scroll down, you see it. The first number, which is initial requirement, means that 50% of your purchase needs to be stock. Like that means I can double my stock with margin. So for example, if I buy $1,000 worth of Apple, I can borrow another $1,000 to buy additional Apple. That's what 50% initial requirement means. And then the margin maintenance underneath, the 35%, which used to be 25, but now it's 35 around election, means that I can let the original price drop to 35% before I get issued a margin call, right? So if my 1,000 investment drops down to 350, I'm gonna have to start selling, right? So that's what that means. But something that's more risky, like for example, I mentioned Energy Fuels, and I'm gonna find it here, or at least perceived to be risky by the algorithms there, or by whoever rates these things. You see here that it actually says 100-100. Okay. If it ever decides to clear up, unfortunately it doesn't want to. But you can kind of see it's a little bit fuzzy. So it says volatility high on top, and then 100-100. So I need 100% of the stock to be non-margin, right? Initial requirement, I need to have $1,000, and then I can't borrow any margin. I can't buy the stock on margin, right? So if I have $1,000 in my account, I can't buy anymore. I can't borrow money to buy more of the stock. So I'm just gonna have the base, nothing on top, and then of course the margin maintenance on that is also 100%, which I guess is meaningless at this point. So that's what that means. I mean, it's kind of straightforward once you think about it as credit and you know, limits to which Robinhood wants to cut you out of the whole equation. And you'll see how it doesn't actually show. I'm going to show you an Apple. That screen doesn't actually exist on the website. It just gives you the information. Oh, Apple is over 2 trillion again. Okay. Price to earnings 37. That's crazy. Okay, maybe a little overvalued. Whatever. Yeah, it doesn't exist. It's just a Morningstar report, history, and that's it. Now I'm not going to do a stock review today. Usually I do a stock review, but today I think just kind of a little bit of an educational video to clear up some of the terminology around what that email means. I mean, to be a little bit on the safe side, if I were you guys and you're trading on margin, I would reduce the margin, just because they're gonna force sell a lot of your positions. If the market does go down big, what happens is some people that are really levered up are forced to sell their position even if they don't want to, and all that selling, the effect of that selling is the market goes down further. So all the positions actually have to sell off, right? So the repricing of the equity of the asset causes it to fall down further, which in turn triggers more forced selling. And so, and that forced selling triggers more forced selling until everybody who's on margin, right, because of these higher margin requirements, gets wiped out, or at least loses a really, really big significant portion of their account. My guess is, though, because of how worried the whole entire financial community is, and Robinhood and everybody else, and how the media even talks about it, about potential enormous volatility, I used to think the same thing, but because they're so worried, I'm not looking for that type of event. I no longer think that's going to be a very volatile session. If it does happen, you might threaten that it's going to go back, it's going to go down, but really I'm thinking it's just going to be a kind of a non-event. Maybe a 5% move, one direction or the other, the most. That's my thinking, but of course I wouldn't put money on it, and I am putting my money where my mouth is because I'm staying in the market. You know, I'm not like raising cash super hard or anything like that. But you know, I'd be on the safe side and not go super levered up, right? I don't have the 40% margin that I used to, or close to 50% margin that I used to have in March. So, all right, I'm gonna end it right here. Hopefully, you're all making more money than I am. I mean, I'm just under 123,000 now. It's been a pretty good run so far this year. I'm pretty happy with how I bounced out, and I'm looking forward to the end of the year and see what kind of events transpire. And hopefully, I maneuver pretty well through it all. All right, that's it for now. Okay, hopefully you all are ready for what's about to come, I guess. Peace.